Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended May 1st, 2013, the long-term side of the conventional mutual funds industry saw assets increase by about $3.2 billion, while money market funds had outflows of about $19.3. Now this week was a little bit different. We saw fairly light trading going on in equity markets. We concluded the bulk of earnings season with the interesting statistic that about 3 out of 5 large cap stocks failed to meet sales expectations. A lot of people are pointing the finger at the recession in Europe as the blame for these multinationals lagging on their revenue forecast, but overall that tended to keep equity investors a bit subdued when it comes to their activities. And overall we saw the stock market up only about 26 basis points, so not a whole lot of activity there. But let's take the 30,000 foot view and look at our macro groups and see where the activity was. Starting off at the top, equity funds, again about $1.9 billion was a fairly mute number for this week. It was better than taxable bond funds, which is a change in leadership. Municipal debt funds continued to send money out the door, about $444 million this week. And finally, money market funds had outflows of about $19.3 billion. Well, because a 26 basis point bump in activity was not enough to draw people off the sidelines, we saw moderate activity as far as flows go among equities. About $1.9 billion this week was not so bad. It's an improvement over the last few weeks, but nowhere near the kind of numbers we saw a few months ago. So I think a lot of investors are still interested in equities. They're still trying to get involved. They're just not really sure where and how they're going to do that. We've seen 17 consecutive weeks of inflows to equity funds. That's very good. And this week we saw another change in leadership. We saw domestic equity funds take in about $3.3 billion, while non-domestic had about $1.4 billion in inflows. Now, leading the charge this week, as it has many weeks this year, emerging market funds. They took in about $720 million. They were followed behind, a long ways behind, by equity income funds took in over $300 million. This represents kind of a barbell approach to investing that we've seen one side of the investment community take on very volatile equities like emerging markets. On the other hand, we see another set of being very conservative, looking for those income-producing equity income types. So as long as this continues, this is probably the only kind of flows activity we're going to find for equity funds for a while. Now, when speaking about ETF equity investing, a little better, a little brighter picture this week. Equity ETF investors allocated about $4.7 billion this week. Spider Gold, SPY, and just generally large cap growth saw most of the outflow activity. On the inflow side, small cap core such as the Russell 2000, the IWM had a very good week, about $1.7 billion. We also saw pretty good flows into Japan-related equities as well as low volatility products. So overall, investors, again, very choosy about the corners of the market they want to play in. Market Vector's Oil Services ETF, OIH, had its best week ever, over $300 million in inflows. Again, somebody must have known something out there that the rest of us didn't. That was a very good week of inflows for that product. Turning our attention to taxable bond funds, $1.7 billion this week, fairly light. We're wondering if people are starting to take their foot off the gas pedal on bond funds. This is the lowest weekly total for this year. Loan funds took in about $646 million. They remain in the catbird seat as far as interest in taxable bond fund products goes. Short investment grade was way behind, about $286 million. On the outflow side, we saw some of the better products for inflows this week. Double line total return continued to amaze. It took in over $100 million. And short duration products from Lord Abbett and JP Morgan also did very well. On the taxable fixed income ETF side, we saw moderate activity here, about $1.4 billion, so very close to what mutual fund investors did. This is their fourth consecutive week of inflows. Mortgages, junk bond funds, loan funds all tended to dominate the inflows side. TIP, which had outflows this week, about $124 million, led the outflow parade. We haven't seen a whole lot of activity as far as outflows go from bond ETFs. It's been a pretty supportive market recently. Next, turning our attention to municipal debt funds. $444 million in outflows isn't a terrible result. We kind of figured that we'd see more outflows. We've seen 10 consecutive weeks now of outflows. And despite a 49 basis point performance this week, in fact, this is their best performance overall for the municipal debt market since July of last year. It simply was not enough to draw people out of the doldrums and prevent the net selling that we've seen over the last couple of months. Overall, I think there's still concern about what's going on with state finances. There's more people talking about what's going on in Puerto Rico, although things may be starting to develop as far as a good foundation underneath finances there. Finally, some consideration about the tax-exempt status and some proposals being bandied about in Washington, D.C. Those have all kept people pulling money out of municipal debt funds, but I think especially spreads right now are very tight, and I think that sticker shock is keeping people from making a bigger allocation and trying to buy on a dip. Obviously, dips have not occurred, but few and far between in the muni market lately. So it's been a good bid in the market. With spreads this tight, somebody's buying out there, but it sure doesn't look like mutual funds are. Finally, the last group to look at is money market funds. They took in about $19.3 billion this week, fairly evenly divided between institutional investors who withdrew about $11.3 billion and retail investors who withdrew about $8 billion. So between the two of those groups, I think they're just probably finding other ways to put money to work. It's just not paying to keep it in these cash vehicles long term. So if you are interested in joining us next week, please see us right here at the same time, same place. You can also check us out online at lipperusfundflows.com. Thanks for watching.